Welcome to Stock Talk. We're jumping straight in today, looking at News Corporation's Q3 2025 financials.
That's right. The report just dropped May 8th.
Yep, so we'll unpack the revenue, net income, how the different business segments are doing, and their big strategic moves.
These reports can be pretty dense, yeah.
Exactly. So our aim here is to pull out the key bits, the really interesting stuff for you.
Make it easy to grasp.
And hey, if you find this useful, please do subscribe, like, share, maybe leave a comment. It genuinely helps us keep doing these deep dives.
Definitely appreciate the support. So, yeah, this report, it gives a good snapshot of where News Corp stands and, where they might be heading.
We'll hit overall financial health, look at each core segment, and talk about those big decisions they've made recently.
Sounds like a plan.
Okay, let's start with the headline numbers. Overall performance, revenue was up at just slightly, 1% year over year.
Yeah, $2.01 billion. But the really eye-catching number is the net income from continuing operations.
Right, that saw a huge jump, 67%, wasn't it? To $107 million.
Exactly. That's a serious boost in profitability.
And that follows through elsewhere too, right? Like the total segment EBITDA.
Up 12% to $290 million. And, EBITDA earnings before interest, taxes, depreciation, amortization, that's a key measure of operational profit.
And the fact that margins expanded across all segments, that says something.
It really does. Suggests they're not just bringing more money in, but they're keeping costs in check, too. Pretty effective management.
Definitely. And for folks tracking EPS, earnings per share.
Good numbers there, too. Reported EPS from continuing operations actually doubled, $30.14.
Doubled. Wow. And adjusted.
Adjusted EPS, also strong growth, up 31% to 17 cents.
Okay. And cash flow, always important.
Yeah, free cash flow for the 9 months ending March was up 13%, hit $539 million. So yeah, the overall picture looks like growing financial strength.
It does. Did they mention currency headwinds? That often plays a part.
They did, yeah. Foreign currency fluctuations actually hit revenue negatively by about $32 million.
Okay.
But even if you adjust for that, and for any acquisitions or divestitures, adjusted revenues still grew by 2%.
So solid underlying growth despite those external factors.
Exactly.
All right, let's break down the segment and see where the growth is actually coming from. Dow Jones seems like the place to start. They had a really strong quarter, right?
They really did. Revenue up 6%, hit $575 million.
And that was mostly digital.
Primarily, yeah. Digital subscriptions and their professional information services. What's really striking is that digital now makes up 82% of total Dow Jones revenue.
82%. That's huge. Shows that digital transition is, well, pretty much complete there.
It's very effective. And the subscriber numbers back that up.
What were those again?
Total average consumer subs reached 6.1 million. That's up 7%. And digital-only subs passed 5.5 million, up 9%.
So people are definitely paying for that quality journalism and financial info online.
It seems like it. And it's not just consumers. The professional side is doing well, too.
Like risk and compliance.
Grew 11% to $84 million. And Dow Jones Energy was up 10% to $69 million.
That diversification into specialized info seems key.
It is. And they're leaning into it. They acquired Oxford Analytica and Dragonfly Intelligence during the quarter, too.
Bolstering that professional offering. Okay.
Yeah, strengthening those markets.
Got it. Let's move over to digital real estate services. Also saw growth. 5% revenue increase to $406 million.
That's right. REA Group was the main driver there.
The Australian business.
Yeah. REA Group revenue grew 6% to $271 million, mostly from Aussie residential price increases and what they call depth penetration.
Meaning?
Basically selling more premium ad packages to agents, getting more revenue per listing, even though the total number of listings nationally was flat.
Interesting. Okay. And what about Move? That's Realtor.com in the U.S.
Their growth was a bit more modest. Revenue up 2% to $135 million.
Where did that growth come from?
From their seller, new homes and rentals, parts of the business. But they did face some headwinds with user engagement.
Yeah, I saw that. Average monthly unique users down 8%, and lead volume dropped quite a bit too, 17%.
Right. They put that down to high mortgage rates hitting the housing market. Makes sense.
But wait, if users and leads dropped, how did revenue still go up, even by 2%?
Good question. They mentioned higher revenue per lead helped offset the lower volume.
So maybe better quality leads or different pricing?
Could be. Focusing on maximizing value from the leads they do get.
Okay. Let's shift gears to book publishing. HarperCollins. Sometimes flies under the radar a bit.
It can, yeah. But it also showed some positive movement. Revenue up 2% to $514 million.
What drove that?
just generally healthy book sales, plus a contribution from a German publisher they bought recently.
And digital's playing a role there, too.
It is. Digital sales grew 3%. Audiobooks were a big part of that, especially through platforms like Spotify.
Yeah, the audiobook market just keeps growing, doesn't it?
It really does. Digital overall is now about 25% of their consumer revenue in publishing.
And backlist, always important for publishers.
Very important.
Yeah.
Makes up around 65% of their sales. Shows they have a really valuable, enduring catalog.
Okay, last segment. News media. Their newspapers and news sites. This was the one segment where revenue actually declined.
Correct. Down 8% to $514 million.
Why the drop?
Mainly lower ad revenues, which isn't surprising for print-focused media, and also because they transferred their third-party printing operations into a joint venture.
Right, the JV. But here's the weird part. Despite lower revenue, their profit, the segment EBITDA, went up by 22%.
Yeah, it's counterintuitive, but it makes sense when you look closer. It's down to cost savings.
Oh, okay. Where from?
Lower operating costs at Talk, and efficiencies from that News UK printing joint venture they set up with DMG Media.
So really tight cost control in that segment.
Extremely effective, it seems. And it's worth noting, even here, digital revenues are now 39% of the segment total. So that transition is happening, albeit maybe slower than Dow Jones.
Okay, now let's talk about that Foxtel sale. Huge strategic move, even though it happened just after the quarter closed.
Absolutely. The sale to DBNN went through April 2nd. News Corp got a big chunk of cash, $592 million for shareholder loans they were owed.
And they still keep a piece of the action.
They do. They now hold a 6% minority equity stake in DDNN, and they get a board seat.
So more than just cashing out, it's a strategic repositioning.
Exactly. News Corp is really stressing that this strengthens their balance sheet significantly, and they expect it to boost their return on invested capital and be accretive to EPS, meaning increase earnings per share.
Which frees them up to focus more on.
Their key growth areas: digital revenues, subscriptions, and especially that professional information services business.
And it fits with the cost discipline theme too, like the printing JV.
Yes, it's all interconnected. Streamlining operations, managing costs, and putting capital towards the higher growth potential areas. That stronger balance sheet gives them more flexibility now.
Makes sense. Digging a bit deeper into the financials, cash flow, balance sheet strength.
Look pretty solid. Operating cash flow for the 9 months was $789 million. Free cash flow, as we said, $539 million.
And cash on hand versus debt.
End of March, they had $2.1 billion in cash and equivalents.
Yeah.
Total borrowings were $1.97 billion. So pretty balanced there.
And the Foxtel cash came in after that date, right?
Exactly. So the balance sheet is even stronger now than those numbers show.
Yeah. The report usually lays out opportunities and risks too. What stood out for you there?
On the opportunities side, no surprise, they're really banking on more growth in digital subs and professional info.
Risk and compliance, energy info.
Yeah, big focus there. Plus, using that Foxtel cash strategically, and any potential recovery in housing would obviously help the real estate side.
Right. Digital audiobooks too for publishing.
On the risk side,
The usual suspect.
pretty much. Currency fluctuations, general macroeconomic uncertainty impacting ads and spending.
Print advertising challenges continue.
Yep, especially for news media. Housing affordability is still a risk for the real estate segment, and just intense digital competition everywhere.
Standard stuff for a media conglomerate these days, I suppose.
Largely, yes.
So wrapping it all up, what's the big conclusion News Corp wants us to draw from this Q3 report?
Well, they're definitely highlighting the strengths. Dow Jones's performance, the professional info growth, the margin expansion everywhere, better cash flow, and the stronger balance sheet post-Foxtel.
So framing it as proof their strategy is working.
Exactly. Proof of a successful strategic transformation that's ongoing.
And looking forward, what are they saying they'll concentrate on?
Continued digital transformation, definitely expanding those professional info services, keeping a tight rein on costs, using capital smartly for growth, and just generally enhancing all their subscription businesses.
Okay, so just to summarize quickly for you, the listener, News Corp's Q3 looks pretty positive overall, driven by that digital pivot, especially Dow Jones and professional info.
Right, and strategic moves like selling Foxtel have really shored up their finances.
Even though they're still dealing with challenges in, traditional print and the tricky real estate market right now.
Exactly. And it's quite interesting, isn't it, how their shift towards digital subs and specialized info mirrors what's happening across the media landscape.
Yeah. How so?
Well, in this age of just overwhelming information, there seems to be this growing value placed on trusted, high-quality niche content.
Stuff people will actually pay for.
Precisely. And These results suggest that strategy is really paying dividends for News Corp. It validates that direction.
That's a great final thought. Something for you to mull over, how News Corp's path might reflect or even influence the future of media and information industries overall. Thanks for joining us for this deep dive.
Until next time.